So good afternoon again. It is really my great pleasure to welcome all of you to this exclusive Hong Kong-Swiss collaboration workshop launch event, organized jointly by FSDC and our esteemed partners, the Consulate General of Switzerland and the Swiss Chamber Hong Kong. I want to highlight why we have chosen this title, Trend and Opportunities in Digital Assets at Web3, because I want to quote my good friend, Michael Benz, when we had dinner together with our overseas guest, Rao, last night. He made a very interesting observation because the Switzerland's canton system is actually a decentralized government structure. So I think it's just very fitting that we have our very first workshop talking about digital assets and Web3. And I'm sure our panelists from Switzerland will share, some exciting development in Zurich about Crypto Valley. So on this note, I would like to introduce our guest of honor, Consul General, Mr. Daniel Hoover, please. Thanks.
Good afternoon from my side, and a very warm welcome to this first workshop on Hong Kong-Swiss collaboration. It's my great pleasure to be here and to hold my first opening remarks actually after I've arrived in Hong Kong only a month ago. And there is no better occasion to do so at a workshop entitled Hong Kong-Swiss Collaboration, with participants from both places here present, but also online. So thank you again to you, Dr. King Au, for co-organizing this event, and also thank you to Hong Kong Invest for hosting us. I'd like also to express my sincere gratitude to the secretary, who will hopefully join us later, and for his continued support to Swiss financial institution, and also for facilitating cross-border cooperation in the financial sector between Hong Kong and Switzerland. Switzerland and Hong Kong may be far apart from each other geographically, but obviously our bilateral relations are strong and diverse. Switzerland is among the top 10 investors, foreign direct investors here in Hong Kong. We have roughly 250 companies present here, a lot of financial institutions, obviously, and Hong Kong remains a very important business and trading and financial hub for Switzerland. Also in terms of trade, Hong Kong is Switzerland's third largest, most important trading partner in Asia. We also share many trademarks. Of course, we are both small, but we are also both places among the most competitive and innovative economies in the world. And obviously, we have both very strong financial centers. Today's workshop focuses on key issues, Web3, digital assets, and their regulation. In 2022, Hong Kong and Switzerland ranked 4th and 5th, respectively, as the most crypto-friendly countries in the world. And given our wealth of expertise in this field, it is fitting that we come together today to find synergies and explore also new horizons in that field. With the approval in principle, SIBA, a leading crypto bank headquartered in Switzerland, will become actually the first licensed company, or one of the first licensed companies in Hong Kong, with crypto capabilities, offering full service financial solutions for the digital age. That also shows that Swiss companies, they are moving into the right direction, and it also demonstrates Hong Kong's increasing attractiveness as a hub for virtual assets, and also its conducive business environment for the sector. In Switzerland, the government and our financial, regulatory body, the Financial Market Supervisory Authority, FINMA, we embrace blockchain and digital assets, and we are actually one of the first countries, as you may know, to implement a comprehensive regulatory framework for digital assets that provides market participants with legal certainty. Increasing digitalization is leading to fundamental changes in the financial industry. New digital technologies are opening the doors to new products and players, but also posing new challenges to traditional financial service providers. Digital assets and the rapidly evolving Web3 landscape have the potential, obviously, to reshape the industry as we know it. And I believe by working together in this area, we can harness the potential of these technologies to drive innovation and ensure the continued growth and resilience of our financial systems. I also believe that by collaborating and sharing knowledge as we do today at this workshop, we can unlock new opportunities, expand our networks, shape the future of the financial industry together. So now is the right time to talk about and be ready for the next global trend in fintech. Before concluding, I would like to thank you, Dr. King, again for having taken this initiative and all your team, obviously, to make today's event possible. And I wish all the participants a very productive and engaging workshop today. Thank you.
Thank you so much.
Thank you.
Yeah, I've got good news because Christopher Hui is on his way now. So bear with us for a few minutes. Maybe that'll give me time to finish my speech, right? So I worked hard on it. So I'll share some highlights. Because we're now actually living through an era of unprecedented transformation fueled by advancement in virtual assets and Web3 technologies. These breakthroughs hold the promise of unlocking immense potential by reshaping the creation and exchange of value and information. In this dynamic landscape, we're encouraged by the Hong Kong SAR government's forward-thinking commitment and support. Initiatives such as the establishment of the Institute of Web3 Hong Kong and the Task Force on Promoting Web3 Development, demonstrating our government's dedication to fostering an environment conducive to the growth and prosperity of Web3 and digital asset development in our city. Here in Hong Kong, with our robust yet flexible regulatory framework and world-class talent, we have an extraordinary opportunity to establish ourselves as a regional blockchain hub. With this in mind, the FSDC, a bit of marketing, is actually currently undertaking a policy research initiative on blockchain technology with the aim of understanding blockchain's full potential and making some recommendations to enhance its adoption in the financial services industry and cross-boundary activities. Today, through our panel discussions, we aim to explore the profound evolution happening within the financial services industry. I would like to take this opportunity to express my gratitude to our distinguished guests, especially speakers from Switzerland, guests flying all the way to Hong Kong for this, and also all of you who have joined us here today. Your presence here signifies your commitment to staying at the forefront of industry developments and your dedication to shaping the future of finance. So in closing, I'm confident that today's event will serve as a catalyst for collaboration and innovation. So let us seize this opportunity to exchange ideas, forge new partnerships, and explore the endless possibilities that lie within the realm of digital assets and Web3. Together, we can navigate the challenges, realize the opportunities, and create a future where finance embraces the digital revolution. So thanks again.
Thank you for this arrangement, and also Mr. Fiova and Peter, who's on his way, I suppose, and also distinguished guests and ladies and gentlemen, good afternoon. I'm very delighted to join you all today for the Hong Kong Swiss Collaboration Workshop to share with you all our vision to promote Hong Kong as a global wealth management and family office hub, and what we have done to develop a conducive and competitive environment for global family offices and asset owners to thrive in Hong Kong. And coincidentally, I actually spent my holiday in Switzerland. So I was in Martyrs, right? Is this place of Martyrs? So it's 2 stations away from Lucerne. So yeah. And in the realm of family office business and wealth management, Switzerland is one of the globally recognized destinations for the management of private wealth, underpinned by its economic prospect and political stability. It is also a competitive financial center known for its robust financial infrastructure and regulatory regime. These attributes, coupled with a network of professionals in legal, tax, private banking, and wealth management, make Switzerland a preferred choice for family offices looking for a reliable and prosperous environment. So let's now shift our perspective to the other side of the globe, here in Hong Kong, a significant icon in the East in the wealth management and family office business landscape. Hong Kong is the only place in the world where the global connections and mainland China opportunities converge in a single city. This unique convergence allows Hong Kong to be mainland China's gateway to the world's financial markets and investors. We take pride in our extensive financial services platform, marked by a highly liquid and efficient capital market. Furthermore, our institutional strengths, such as an independent registry and the unrestricted flow of capital and information, are integral elements that underscore our appeal. These attributes naturally draw ultra-high net worth individuals, which I'm sure some of you are, to manage their investment portfolios here. Backing this claim is a recent market report that ranks Hong Kong as the world's top ultra-high net worth city, hosting more than 12,000 ultra-high net worth individuals last year. And this is a testimony to the city's potential and capacity to attract and nurture wealth, further solidifying our position as a global wealth management and family office hub. The asset and wealth management business of Hong Kong amounted to over $30 trillion, which is around like $4 trillion US dollars as at end last year. And with 64% of that funding sourced from non-Hong Kong investors. And Hong Kong is also Asia's largest private equity hub and cross-border wealth management center. This demonstrates Hong Kong's strength as Asia's premier asset and wealth management hub. Our standing will continue to flourish with the significant functions and positioning of Hong Kong in the overall development of our country being acknowledged in the National 14th Five-Year Plan. It supports Hong Kong to enhance its status as an international financial center, strengthen its status as a global offshore renminbi business hub, an international asset management center, and a risk management center, as well as deepen and widen the mutual access between the financial markets in Hong Kong and the mainland. So moving back to the theme of today's session on family offices, the government has consistently taken a multi-pronged approach to create a conducive business environment for family offices, with the aim of attracting them to establish and operate here in Hong Kong. And in March this year, we issued a policy statement on developing family office businesses in Hong Kong to set out our policy stance and measures. Just have a show of hands. Anyone who are not aware of this policy statement? Okay, good. So I won't blame you. So notable examples include the tax exemption regime launched this year for family-owned investment holding vehicles managed by single family offices in Hong Kong, and the launch of a new network of family office service providers to bring together relevant professional service providers and create more business opportunities. Later this year, we will be setting up an academy for wealth legacy, and King is here, so you're accountable for that. And we will release details of this new capital investment entrance scheme so as to enrich the talent pool and attract new capital to Hong Kong. Building on the success of our inaugural Wealth for Good in Hong Kong Summit, a flagship event designed to promote family office development, we are excited to announce we are planning to host the next edition again next year. This premier event will continue to highlight our unique advantages and present a wealth of opportunities for global family offices seeking to deploy wealth for long-term good. The development of fintech and virtual assets, which actually form part of today's session, as I can see from the panel lineup, needless to say, is another area of interest for a family office business. And this is also the primary focus of today's discussion. As you are aware, last year, we have issued a policy statement, another one, on development of virtual assets in Hong Kong, outlining the vision and policy direction of the government. Essentially, our approach seeks to strike a balance between regulation and market development. Together with financial regulators, we are committed to establishing a facilitating environment with timely and necessary guardrails to mitigate actual and potential risks put in place in order to be in accordance with international standards, so as to promote the sustainable and responsible development of the VA sector here in Hong Kong. The policy statement has been well received by the industry. As of end June this year, Invest Hong Kong has received expressions of interest from over 120 VA-related foreign and mainland companies looking to establish their presence in Hong Kong. These companies span a range of sectors, including VA exchanges, blockchain infrastructure, network security, virtual currency wallets, and payment companies, as well as projects focused on building the Web3 ecosystem. A comprehensive and clear regulatory system is essential to facilitate the sustainable development of VA and attract quality enterprises to explore opportunities in Hong Kong. On this front, the government established a licensing regime for VA service providers through amending the Anti-Money Laundering and Counter-Terrorist Financing Ordinance. The regime commenced operation in June this year, requiring any entity involved in VA exchange business to apply for a license from the SFC. Our regulatory approach is one of the first that complies with international AML and CTF requirements as stipulated by the Financial Action Task Force, and provides full regulatory requirements for investor protection, a stance that has been recognized by the International Monetary Fund. There are now 2 licensed VA service providers in Hong Kong, both of which have obtained license upgrade under the SFO regime and can now offer VA services to retail investors. In addition, my bureau and Hong Kong Monetary Authority are working on a regulatory regime for stablecoins, and we will launch a public consultation soon, target to introduce a legislative amendment in 2024. On the market development front, we have advanced our securities rules to allow regulated intermediaries to offer trading of eligible VA futures ETFs to retail investors in Hong Kong, making us a pioneer in the Asian market. Within a few months' time, we are glad to see that 3 VA futures ETFs have already been listed and traded on the Hong Kong Stock Exchange. And to embrace the mega trend of Web3 development, the Financial Secretary has also established a task force on promoting Web3 development to look further into the market situation, development opportunities, regulation needs, and ecosystem of the VA sector, an integral part of the Web3 ecosystem, aiming to formulate proposals on how to promote the sustainable and responsible development of the sector and Web3 in Hong Kong. To close, Hong Kong, as an international financial center with a highly digitalized economy, is at the forefront of the technological evolution. We are a forerunner in embracing the emergence of fintech and are now home to over 800 fintech companies and startups, offering a wide spectrum of innovative financial services to the community. These include 8 virtual banks, 4 virtual insurers, and 2 licensed VA trading platforms, as I discussed earlier. And our unique strengths of converging global connections and mainland China's opportunities, coupled with our facilitation measures for investments, present immense opportunities for family offices, entrepreneurs, service providers, and investors, and of course, all of you. And we welcome global family offices and investors to come to Hong Kong and explore investment opportunities in our thriving market. And finally, I would like to wish you all a very fruitful discussion today. Thank you.
So now, without much ado, I would like to introduce our panel on digital asset and Web3. May I ask moderator Victor Yim, head of FinTech at Hong Kong Cyberport, to the floor, and also our speaker, Sam.
So good afternoon, everyone. I'm the head of FinTech of Cyberport. First of all, thank you for the Swiss General Council and FSDC to invited us to be part of this panel. And I'm delighted to be the moderator together with my friends Sam here and also Evans. So both of them are actually from the Cyberport community. So first of all, let me take a bit of time to introduce a little bit about Cyberport for our Swiss friends. So we are the biggest fintech communities in Hong Kong. So echoing what Secretary Hui just said, out of the 800 fintech companies, more than half are actually in the Cyberport community. And also, since the establishment of the Web3 Hub at Cyberport in January this year, we have attracted more than 100 Web3 companies, and the community has grown to 190 Web3 related enterprises with Web3 application, content such as NFT and metaverse, fintech, virtual asset trading platform, and other related services. The blockchain foundation services, middleware, wallet, and other Web3 related security services. And among those 190 companies, actually a significant amount are coming from mainland and overseas. But of course, as part of today's event, the aim is we want to have more, even more from overseas. And of course, we hope to receive more from the Switzerland community. And just now, General Counsel also mentioned SIBA Bank is actually part of the Cyberport community. So let me first start to allow our panelists to introduce themselves. So first of all, I'll give the time to Evans.
Hi, my name is Evan L. Yang. I am the group president of Animoca Brands, a Cyberport company. And I have a background in traditional finance and then management consulting. And then I was the deputy CEO of Current Motor Bus Company, which is in Hong Kong. And I ran a company called GOG, the expert network firm. And then I joined Animoca about 2 years ago. And our company is one of the forerunners, actually globally, but based in Hong Kong, in developing and enabling digital asset ownership. We have about 400 companies in our portfolio. And we are not only an investor, but we are also an operator and also an advisor in the space.
Thank you, Evans. So Sam, your turn.
Thank you. My name is Sam Lee. I'm the founder and CEO of ConStreet. Today is a great pleasure to be here. Thank you for having me. I am always at the forefront of the transformation and commercializing new technology. Now we talk about Web3. I actually started with Web1 with the internet days. Some of you might still remember this company, Tom.com. I was at the IPO team at the time, and then move on to help PCCW roll out the 3G networks and all the new technologies. Starting in 2016, I came across blockchain, find it very fascinating, and will bring a lot of changes to the financial industry. And I started ConStreet with 3 other partners. They're all from traditional financial world. So we are here trying to bring transformation to hopefully create more opportunities working with everybody. Thank you.
Thank you, Sam. Hi, Sina. So very nice to meet you this morning via email. So may I invite you to introduce yourself?
With great pleasure. Good afternoon, everybody, or good morning for the Swiss people. It's a pleasure to be here with you today. I hope you can hear me. And my name is Sina. I look back to almost 30 years in finance, in wealth management at leading financial institutions. I'm certified international wealth manager, and I came 4 years ago into the crypto space by good accident, I have to say, when I was introduced to our 2 co-founders, Henny Rashwan and Ophelia Schneider. At 21 shares, I'm head of Switzerland and strategic relations. And since this year, I also cover Middle East. And in my role, I'm overseeing the rapid expansion in the Swiss home market of 21 shares. And as I said, since 2023, also Middle East. For those who want to know more about the company, I have the first time now since we have the QR code in my background. We are a Swiss full stack company. What does it mean? It means we offer both the infrastructure as well as the end consumer product in an integrated way under one brand umbrella, which is 21.co. But our brand 21.shares, founded 5 years ago and headquartered in Zurich, is a Swiss product issuer and the world's largest crypto ETP issuer, committed to make the crypto investing more accessible to both institutional and retail investors. And just a small story, I know I speak long, but why our company exists. It's actually a real story because our two co-founders, Henny and Ophelia, wanted to have making a meaningful investment in the crypto space for their own families. So they have both family offices and created this company 5 years ago.
Thank you, Sina. I really see how like Hong Kong and Switzerland have a lot of collaboration opportunities. And last but not least, Philip, may I invite you to introduce yourself and about your company?
Of course. My name is Philip Nagelli. Welcome and thank you for having me here on the panel. It's a great honor. Well, about Gen2, I've been the founder and CEO now for 5 years since we started. Gen2 is much more than a service provider in the financial space. We actually expand the investment universe for all our clients together with them and the partners that want to come on board. We make all assets bankable, so we're not only in the digital space, we're actually found, I guess, the smallest and most active form for creating securities, asset-backed securities on all sorts of assets. So we do securities on traditional assets, on alternative assets, and also on digital assets. That goes from bankable strategies over to private equity and private and venture investments, all the way to real estate in the metaverse, where we did the first worldwide product, or we do products like the ETP for the SEBA Bank and Signum, and have partnerships with Coinbase and so on. So a long story short, we can create simple, fast investment products on any sort of asset, and with that, build the bridge from traditional investors into any asset class and any endeavor that they would like. Right now, we're doing this for 280 financial intermediaries in 26 countries. We built over 1,200 products already, and we're aiming to scale up to 30,000 products in the next couple of years, and just received an important or set of an important milestone by being backed by Steve Cohen out of the US to make this a global enterprise.
Thank you, Philip. I think I can see Sam is actually thinking while you're speaking. I'm sure Sam's already thinking about the partnership opportunity. So going back to Evan, so I think nobody needs any introduction to Animoca Brands, and you're always like proud of Hong Kong and Cyberport in the Web3 space, being almost I can say you guys are conglomerates of Web3. And can you share with us some insight how you would leverage like digital asset and Web3 technology to drive future innovation and growth? And what role do you see Animoca brand playing in shaping the future of Hong Kong's digital asset ecosystem and the integration with Web3 application?
Sure. I mean, that's multiple questions, but I can take it, I guess, one at a time. So Animoca's core purpose is to enable digital asset ownership. And we believe that is the digital asset ownership is the what's underpinning Web3. We have seen the evolution of the internet from Web 1 to Web 2 to now Web 3. Again, from the time when I was a college student back in the early 90s at the time, I didn't even have online connectivity, right? I had to use email in the computer center. And at the time, it was there was some skepticism as to sort of how important email is, because we didn't have it at the time, because everybody has a phone already. There were communication devices at that time. Mobile barely was adopted, but it was beginning to take shape. And then when it first started, which was actually in the early 90s, nobody really paid attention. And then it gained a lot of traction. And then a lot of capital came in, and then it went through a boom bust cycle as well. But many of the companies that actually ended up becoming winners in the space actually started from that time. And similarly, in Web3, we see the same. Nobody paid attention to it. So blockchain actually came from, it's not a new technology. It really came from two areas, right? One is that it's arisen from quantitative easing, right? So basically I would say irresponsible management of monetary systems by governments, because of as most of you know, especially from those of you in Switzerland, more money has been printed in the US dollar system than there was ever money created in the last decade and a half. That brings about great inflation, and the fact that the system, the monetary system is dollar-based, puts itself into an area where there is many people question it, right? As people are knowledgeable nowadays, they wonder if that's the way to go. Second trend is that there's also over-concentration of data in terms of over-centralization of data in terms of data mining. So on that part is what we see as a trend, and also that we would say Google and Facebook actually know a lot more about you than you would know yourself. You have, you might be on Gmail, your travel patterns, what you do, what you search for. It literally can spit out your entire digital footprint, especially those of you who have children, more so than you know about them, right? I literally guarantee you, Google knows more about your children than you know about them, because they have the data. Right, and this data self-sovereignty is what gives rise to a lot of monetization aspects of what you don't own about your data, what you don't know about yourself, but you advertise against it, and therefore your preferences, etc., even voting behavior might be steered by data companies. Now, in Web3, where we're talking about data decentralization, which is where we ultimately get to, from getting around the irresponsible management monetary system, which is the invention of Bitcoin, to now Web3, which is about decentralization of digital asset ownership. We have Web3, which is a philosophy about how do we get ourselves to the point where we're self-sovereign on our data, right? That's the premise of Web3. Now, Animoca Brands itself came from gaming, which is our roots. And why do we have gaming as our first applications? Because our roots are in gaming. And the size of gaming is huge, because if you add the film industry and the music industry together, there will be less than $100 billion, and gaming is $200 billion. So it's actually 2 times the size of all of the film market and the music market combined, and times 2. Our purpose is to, obviously we have 400 companies in our portfolio. We're an investor, so we want to build ecosystem. But at the same time, we retain option to acquire some of these companies as we see them develop, like the Sandbox is one such company. It originally was not a company that was focused on the blockchain, but through our partnership, it became a blockchain-based company. And so we have a portfolio of more than a dozen companies that are in our operations, and we're building a digital asset ecosystem based on that, alongside our ecosystem building services in our 400 companies. And we also do advisory, meaning that we will launch NFTs, token systems, that would then interact with the greater digital asset ecosystem. Again, we truly believe in the future of Web3. We are very glad that there are domiciles such as Switzerland, and obviously home right here in Hong Kong, where I live and grew up in, that are embracing regulations. We believe the market needs to be regulated as we go forward. I'll basically close by saying that don't worry about the volatility in the markets. It happens everywhere. We had a decade and a half of quantitative easing, and people are chasing, all things shiny. But here in Singapore in token 2049, where I'm at right now, you see lots of builders, right? You have thousands of people running around. And with a bear market like this, if you see builders being very excited about the space, it means that they really believe in it. They're not there for a quick buck because a quick buck isn't available. In fact, funding isn't available. But there are infrastructure being built, wall solutions being built, and we're talking about infrastructure abstraction, meaning that we don't have to talk about all of these wallet creations, understanding what chains to be on. As the applications come on, we don't talk about email services, do we use, Google, Yahoo, and all of that? And then the consumer application will grow from here. That's what we believe in.
Thank you, Evans. Definitely, gaming is a very solid application that always stay in the forefront of technology. NVIDIA didn't build the chips for AI at the beginning, so it's built for gaming. Now it is basically fueling all AI applications. So I would like to address the next question to Sam. So you mentioned you actually gone through a couple of cycles. So this is like $100 million question. So what do you think will the future evolve based on what you have experienced and what you have seen and what you are planning?
Yeah, Constrict have been started in 2017, so a little over 6 years. As you can imagine, in the digital asset space, these 6 years are quite interesting. We have gone through all the journey for the development, seen the ICO crazy days in 2017, and then like the DeFi wave and NFT. Very interestingly, lately on the security tokens development. Our subsidiary Signum Digital, very grateful, received a Type 1 license from SFC to be an official STO platform distributor in Hong Kong. So the way we see now, virtual asset is a very broad term, right? It actually can break down into different asset class already, right? There is the Bitcoin by itself. It could its own ecosystem. And there are the cryptocurrency, 24,000 plus of them, right? These are the areas always, a little bit of messy and unregulated and, but it's still there, it exists. And there is the stable coin, right? Stable coin, if you think about it, the concept is not new, right? Hong Kong people is very familiar with stable coin because Hong Kong dollar in a way is a stable coin conceptual wise, right? You put a US dollar in and print 7.8 out. And we also every day when we spend, we do the dude spending, we actually spending the electronic money, 1-to-1 pack to Hong Kong dollar with the octopus. It's a concept of, right? But there is also the government issue stable coin, it's the CBDC, right? It's like the digital RMB. We have a lot of discussion about Hong Kong dollar coming out and other sovereignties also thinking about similar. And there's also the NFT, right? NFT is quite interesting if you think about it, is kind of more like lean towards the e-commerce, right? If you think about it, whether you agree, there's, last year, for example, very popular use case is people trading digital image. Whether you agree the valuation is another question, but the digital image exists, right? If you think about it, if it is a one-to-one relationship, it could somewhat like an e-commerce transaction, but of course, like people take it much further away to speculation and things like that. But it doesn't have to be a digital image, right? Because NFT is just a digital certificate, a digital ownership certificate of something in the back. It could be a physical product, it could be an entity, it could be other things as well, right? And the other type is what I mentioned about security tokens. security tokens, I think, is a very interesting asset class. The way I see it is a bridge between the digital world and traditional financial system. While it is a token, it is all about the underlying asset value. And the underlying asset value could be from different type of structure. It's a structured financial product, right? It could be shares of a company. It could be a fixed asset, and it could be even just an income stream, right? So this is very flexible. And while it is a digital asset, but underneath it could be what we often talk about recently, real world asset, something traditional investment, traditional financial world understand, and we can apply a lot of valuation model to do the valuation of the projects. And I think Hong Kong now is also in a very good position. Although many people say, oh, always like to compare Hong Kong with Singapore, right? Although Singapore might move earlier in terms of the whole crypto space, right? But in terms of security token, we're actually ahead. If you look at Singapore, they are not as progressive as Hong Kong for laying down the framework for developing security tokens. And I often think about why, because it's actually very different business type, right? Because crypto, if you think about it, is very much like the Forex business, right? You think about it, people buying into Bitcoin and Ethereum, they're trading the volatilities, right? Nobody controls the Bitcoin. It's very much like Forex. But when we talk about security token business, it's much closer to capital market, equity market, which historically is a strong area of Hong Kong, and Singapore actually behind us. So I think Hong Kong does have all the building blocks and the background to excel and do really well in security tokens. And interestingly, if we look around the world, nobody is really taking a leadership position. Even in the US, they're not so much well developed in security token space neither. So I think this could be a very good opportunity for Hong Kong.
Thank you, Sam. So let's heat up the tokenization discussion, and let me invite Philip to give us your thoughts. And do you think like STO, real world asset, is a way to attract like institutional investor to participate more, or like what would be the key reason for them to embrace digital asset and Web3?
I guess there are 2 points on this. First, I would totally agree with Sam, and I would even state that this is the future, and that's absolutely where we're heading. I guess, but we have to talk a bit more about the adaptation of this, and before we then hopefully end up in a world with atomic swaps, I guess we still have some way to go. I believe that today it's mostly important that, like in the regulatory framework, and as you did these great examples as well in Hong Kong, we have to bring the digital asset world, the DeFi world, and the TradFi world together. One part is certainly regulations, which has to be embraced, otherwise the trust cannot be established. And on the other side, we also have to have this synergy because of the capital, and the capital that grows this market and leads it together. So in this adaptation, I would say that there just has to be a lot more communication between traditional players and actually the DeFi space, the Web3 space. There must be bridges built to do so, that we end up in a world where this is really happening. Because today we're in a bit of a deadlock on some part, and I don't want to be too negative about it, but we need to see more of that adaptation, and we need to see more the benefit of the technology, and actually also think about what these bridges are in between, so that exchange is vital and positive and creative. And Our viewpoint on this is very simple. Capital needs to flow between these asset classes, that there is experience established that is actually given by the people that are in the space, like Sam and others, like Sina, and that has to come from both sides. And I guess if you do it with securities leading into digital assets or in all sorts of assets, and then finally resulting in security tokens, then we all talk of the same. And then we have solutions that actually lead our markets in new vitality and into a prosperous future and into an individual future that we all see coming, because it is clear it will individualize strategies, assets, everything will go to the diversification and into the individualization for all of us.
Thank you, Philip. So I always find like DeFi is one of the biggest innovation in Web3 with all the financial engineering and formulas backing what could happen. Sina, can you let us know your thoughts about like how, like just like what Philip mentioned, the TradFi and DeFi, like how they can collaborate. And I do believe actually the institutional user would be the first to really adopt DeFi or make DeFi a mainstream. So could you share with us your thoughts?
With great pleasure. I hope my dog will not bark anymore, because before she was so loud. So we believe that everything will be tokenized at one point. So that's why I said I also like, of course, the business model Gen 2 is having. So currently we offer what I don't know if I mentioned it before, about 35 physically backed crypto ETPs, exchange traded products, issued at more than 10 traditional exchanges, with our company 21 shares. But just this week, I have to say, like 21.co, our mother company, announced 21.co wrapper tokens, our upcoming suite of wrapped assets designed for cross-chain functionality and greater security than purchasing the underlying assets outright, what we just spoke a little bit before. As a cross-chain security involves, the initial suite of centralized wrapped assets provides a stable opportunity to maintain momentum while the DeFi community scales. There are many ways to interact with DeFi ecosystem actually. For simple use cases like banking to conducting complex transactions, on-chain interactions create the traceable ledger of actions and accountability. Each blockchain network is built for a specific use, and holding a token, for example, Aave or Solana, signals confidence and the success of application of that network. The utility is what makes this tech so promising for billions of people, you know. Reaching mass adoption means supporting a wide range of DeFi use cases and bridging liquidity across them. So DeFi needs cross-chain interoperability to be successful, but up to now at this point, traditional solutions have been blocked by serious security issues. We firmly believe that DeFi in the future, and have long been committed to a bridging, like Philip just said, bridging the traditional finance and decentralized finance with our expertise and our products. With the launch of centralized wrapped tokens, for example, we are thrilled to that offering in this much needed technology to the DeFi community that will help the DeFi continue to win. And if you want to know more about these details, just let me know, reach out to me.
Or scan the QR code, right?
It is the QR code is more for the 21 shares business, but it's also linked to 21.co, which is actually the overall company over our structure.
Thank you very much. So Athens, I heard about like two very interesting projects, such as the Mockaverse and Open Campus. Can you explain us a little bit what are they about and why do you think they have high potential in Hong Kong?
Yes, we go, well, we go pretty deep into this, right? I think just to put it simply, Mochaverse is a Web3 membership pass in what we call in culture and entertainment. So within that, there are, because of our ecosystem, we believe that there needs to be a consumer application layer that acts as almost an infrastructure layer to how people would discover various applications, right? So actually, if you don't mind, since I'm on Zoom, I might have a slide or two on this. Does people see this?
Yes, we can.
Yeah, well, I know we're not supposed to even share slides, but I mean, I'm just kind of like, why not? Since I have the slide on anyway. So you can see that what we're doing is that there's identity pass. So what we're doing here is that you can actually sign up right now. Go to the website and sign up right now for a Web3 identity pass that is yourself. So, for instance, I can sign up for a Evan.mocha, which represent me. And everything that I do in terms of Evan Don Mocha will be on chain. The data and where I go to in terms of my interactions and what I do with this particular identity will be on chain. But no one mines my data without my permission, right? It's my own identity pass. It's actually a soulbound token, without getting too technical about this. But what it allows people to do is that you can put all your credentials on this identity pass. So we believe that in the future, you can build small communities off of this identity pass. Be it, if you're your F1 fan, you can have we can have a Evan.F1 on there. We can have a Evan.NBA or Evan.Lakers pass in there. That represents my identity and my reputation and my interactions within that community, right? And what it does is that it allows that particular pass will allow that particular user to have a discovery platform across what is offered under that platform, right? And we would also complement that with kind of like what we call the Asia Miles of Web3, which is incentivizing for interaction. So right now you get a lot of junk mail, right? And people just ignore it because people don't know you, they might mine your data, and then at the end of the day, it's not very targeted advertising. And when it's targeted advertising, you serve your identity and your data is mined for free. Here you have an identity pass where your reputation and your identity actually is valuable in that when you're creating data. You are actually going to be able to people offer you incentive to then interact with them, right? As you sort of go forward, you can see that where we are is that we can see that you have an identity, you have a discovery platform, and what you do is that as you engage with these platforms, you actually earn experience points. And these experience points will build in a reputation. It might bring you additional benefits. So it's a platform that allows your data to be monetized through experience points, right? And there are obviously additional rewards going to be based on that. And of course, as the ecosystem itself grows, the economy itself also grows, right? So that's sort of a little bit about Mochaverse. On the Open Campus is something maybe that's easier to understand. Which is decentralized education. Open Campus is actually a protocol that came from the acquisition of actually a Web2 education company called TinyTap, which is an Israel company, which does kids, I would say mostly kids curriculum, math, English, and all that sort of, almost like flashcards, but that asks you questions. And then you play games, a gamified experience, right? That teaches kids, right? So what we've essentially done is that we have actually tokenized those curriculums. They're actually created by teachers, and you tokenize those curriculums, and they become co-publisher NFTs. And you will work with the teacher once you have tokenized the curriculum to then create additional curriculums on what you call education innovation. to then really innovate for the sake of trying to see if you can be creative in that in creation of new curriculum. Now, we believe ultimately teachers are actually underpaid in this world, and but these teachers are able to receive supplementary income via creation of these curriculum. Once you tokenize some of these curriculum, they're able to sell some of these for $30,000 US, $50,000 US, and create a passive income from this, right? And that, we believe, is the way we can unlock the creativity of teachers to innovate as we go forward, how how students can learn in the future. We ultimately have a core belief that the education curriculum itself actually hasn't evolved since the 60s, right? And the core curriculum of, math, English, etc., even sciences, is sort of outdated. And we would like to see if decentralized education, by empowering teachers and unleashing their creativity, can give us a platform where where tokenized curriculums can unlock the freedom of creativity from them. So is our curriculum. So it's our initiative to see if we can decentralize education by giving the power of teachers for creativity to then bring that to the world in the Web3 reality. So those are the two projects.
Yeah, thank you, Evans. I think it's a very good demonstration of the potential of Web3 apart from assets. So we only have a few minutes left, so I'm going to give Sam, Sina, and Philip a challenge. So could you give us highlight one particular trends or technology advancement that you believe we should focus on or pay attention to in the near future? Maybe I'll start with Sina and then Philip, and then Sam, you will be the toughest because you cannot repeat what they said.
I think that's my favorite questions, probably, because I like the opportunities and channel the positive way. I think it's still early, guys. There's a lot still to come, and I think to build in order to get a mainstream, I think, for the mainstream adoption. And there will be still a lot to come. I mean, who has thought that our mobile will be so important, right, today? And maybe just some thoughts without going into details, because we don't have any time, like you said. Blockchain, digital assets, democratized finance, so financial inclusion, censorship resistance, etc., will be a topic. Then tokens might become the wrapper of the future, like the ETFs, exchange traded funds in recent history. Then it's all about infrastructure. So blockchain is revolutioning the financial infrastructure, and the Web3 infrastructure unlocks also global liquidity. In digital assets and tokenized are traded global, and there will be the need for global, neutral, decentralized settlement layers, just like what we saw with the internet in the past for information. And in short term also, if I can speak already a little bit about the challenges, I think the challenge will be probably the regulatory part, like it shouldn't be over-regularized, but wrong policies maybe could be hinder innovation. And I think that people are still a little bit cynical and afraid about the new technology coming out, although that will be definitely an added value, And that's a little bit like my thoughts I have in my head, maybe less in details, but I give space to the other ones to say something.
Yeah, thank you, Sina. Philip?
Well, I think that what Ivan said, identity is certainly the center point here to me. And certainly we need to solve that. On the other side, I think, and I was actually surprised that Sina was mentioning it, I actually look forward to the ETFs, and I look forward to a lot more product, because without capital, without fuel, our industry just simply does not exist. And without the investors coming to the game and the experienced people out of finance are caring about these subjects, it will not proceed as fast as we all would like it. So I look forward to product. I look forward to identity, to solving the identity point. And finally, I also look forward to that we maybe get to the point like in the internet, where we don't even talk about blockchain anymore or crypto or digital assets, when it's just the natural in using it. And it's less about the backbone and the wonderful things of this technology and the possibilities, where we actually really focus on the simple usage and making the usage just beautiful and great for everyone, and for everyone across the globe. And with that, maybe also for people that don't have the great opportunity to work out of Switzerland or out of Hong Kong.
Thank you.
But Philip, just to add something, you shouldn't be surprised that I said that, because for the ETF one, we are first in line with ARK Invest who's filing the US, right?
I know. So I throw a stone back to you.
So finally, Sam, we're out of time, but you still have 1 minute.
Thank you. I don't have the crystal ball, but I want you to leave this session with something for you to think about, right? So we have new technology every day, but human behavior change very slowly, right? And the technology cycle keep repeating itself. If we look back to the internet days, the .com is very similar to the ICO boom in 2017. So let's look at the internet days. .com bubble burst, the market tanked. It actually took 7 years to recover to the same point and then go again, up until 2007. And what happened in 2007? Where was the tipping point? What happened is the birth of iPhone. When iPhone came in 2007, it took the industry up in a strict uphill, creating the cloud industry, the CDN, the application, everything, right? And of course, eventually also like Android come very soon. So my question is, and let's call that iPhone moment. We had, for Web3, we had the 2017 ICO boom, right? That's like .com, literally. Bubble burst. And now we're already 6 years up from now. If it took 7 years for people to really get around a new technology and embrace their living style around it. So now is getting very close to the 7 year, right? But what is the tipping point, right? It's not going to be iPhone, it's something else. My personal opinion is that because Web3 very much talk about financial transactions, right? We talk about now like digital assets, security tokens. I think definitely it will be the regulation. The regulation is key piece to bring the two worlds together, really getting people to invest in a more comfortable way, because anything investable, I think investor interests need to be protected. So, and guess what? We look around. I think our SFC have done a wonderful job. You know, they are very progressing. They move slowly with a reason. They're not like Singapore. But now I think the framework is there, right? We have the 2 VA operator able to serve retail, and more coming out like with the crypto funds, and we are the distribution platform, and I'm sure more coming out. So if 7 years from 2017 is 2024 next year, so let's watch to see if that will be a tipping point to take us to a higher ground. Thank you.
Thank you. Thank you very much. Thank you for panelists, and thank you for listening.
Thank you. Thank you so much. Sam, yeah, you have done my introduction. So, so without much ado, I would like to invite Raul to join the floor. And please invite your panel speakers. Yeah. By the way, thanks again, Raul, for coming all the way from Zurich for this.
Yes, I came all the way, but it's not so far away. 3 movies and a little bit sleep, and then you're here. Okay, please take a seat. Maybe you can pull up our guests from Switzerland, which are now online. And short introduction to myself. Thank you very much. Dr. King, to be here. An invitation. It's really nice to be back in Hong Kong again. I have visited Hong Kong many times. I was former CEO of Simpulse, Swiss-based, but very active in Asia, consulting firm in the banking and insurance industry. Since 10 years, I'm a very, very active fintech investor. And we found actually the largest Swiss angel club in Switzerland and built a platform called SICTIC, a very different word, but it should an abbreviation for the Swiss ICT Investors Club. We have 500 members and we do every month events, pitching events, education events for angels, and I'm also representing the fintech. And startup is something innovation, and innovation is very important. And I would just like to hand over to also short introduction of you, please. I start with Elizabeth. Ladies first, like always.
Right. Thank you all. I'm Elizabeth, the Director of Licensing and Head of FinTech Unit at the SFC. So my role is mainly to look at FinTech policy in Hong Kong from the SFC's perspective. So whether how we could support the FinTech industry by providing clear guidance and consistency in regulations so that the FinTech industry will know how to help financial institutions in designing tech solutions. So we used to look at, for example, online platforms, robo-advice. We're looking at artificial intelligence. And I think one of the most well-known kind of focus that we have currently is virtual assets and also going forward tokenization. So this is the current work that we're looking at. And we hope to be able to provide more guidance to the industry to let the industry grow.
Okay, so thank you very much. Maybe to you, Rocky.
Yeah, thank you. Hi all. I'm Rocky Mui, a partner of Clifford Chance. I'm the head of our asset management and financial regulatory group in Hong Kong. So my team covers all the retail fund side of things, all the regulatory items, whether it's securities, banking, insurance. I also lead our Hong Kong fintech practice. So that brings me to today's topic, specializing in blockchain, crypto, eKYC, e-banking, online brokerage, and a pleasure to be here today and looking forward to the discussion.
Thank you, Rocky. Now coming to Katharina, also short introduction from yourself.
Good morning, good afternoon, everybody. First of all, thank you very much for having me here. My name is Katharina Lasota-Heller. I am based in Zug in Switzerland, where I'm actually at the moment sitting in front of the camera. I am attorney at law, admitted to practice in Switzerland and in Poland, those in European Union. And my practice is kind of a digital bridge between Switzerland and European Union. Based on that experience, I do advise also other companies being so-called third countries towards European Union, like let's say Hong Kong, Singapore, or UK. And I do have quite long practice in the area of fintech. I used to be a global compliance officer for a company called Naspers, which is still the main investors in Tencent Group. And I was there by the first crisis when people, Bank of China, wanted to prohibit the use of QQ points somewhere around 2010. And beside them, I am a co-president, co-chair of Crypto Valley, of regulatory group in the Crypto Valley Association in Switzerland, and president of organization which is called Swiss Polish Blockchain Association. I'm passionate about fintech and digital finance, about disruption, and I'm very happy and looking forward to share my views with you today.
Thank you very much, Katharina. Now, Ronald, last but not least.
Hi, everyone. I'm Ronald. I'm a partner at the law firm MME. I'm in the space since 2015. And as you know, MME is also the firm that gave birth to Ethereum in Switzerland in the Crypto Valley. So the firm is very engaged in this space. And my daily work is related to layer ones, layer two, to digital asset services for financial institutions like staking or lending, but also on the tokenization side. So whether it's tokenization of physical assets or tokenization of financial instruments, but also the creation of financial instruments linking to digital assets. Thanks for the invitation, and I'm looking forward to having a good discussion with you.
Thank you very much for all the introductions. Now, when I get the job to take over the panel discussion for moderation for regulation, I was like, could I not switch to the first one? Because regulation sounds not interesting, but very much thank you to Sam that he thinks that regulation will be a tipping or helping to be the tipping point. Now we want together explore a little bit the Hong Kong, Switzerland approach to regulation. That's why we have very good experts in here. But we also want to go a little bit deeper about the digital assets regulations, tokenization. So that's the goal. We don't have so much time to cover all the topics. I would do something about KYC and AML. That would be also interesting. But unfortunately, we don't have the time. So regulation equals trust and maybe equals hindering innovation. So Elizabeth, I want to start with the first question, also get us an impression. Yeah, this world is coming now and Hong Kong has decided to embrace it. And what were the reasons? And just give us a short update where you're standing now. And maybe also we have done later the question about the future. So where's the road going to? Yeah, give us an update. That would be fun.
Right. I'm sure everybody knows that there's a new regime in Hong Kong that governs virtual asset trading platforms. Actually, the SFC has already entered the virtual asset space to regulate the space since 2018. And back then, we decided that we needed to regulate because we saw that virtual assets seem to be here to stay, but then we saw a lot of investor protection issues. So we decided we had to regulate. We couldn't just regulate from anti-money laundering or payments, which is what a lot of other jurisdictions are doing. And we decided to step in to regulate from an investor protection kind of perspective. So right now, we've got a new regime for centralized virtual asset trading platforms that took effect on June the 1st, 2023. And under this new regime, all centralized virtual asset trading platforms that operate in Hong Kong need to be licensed with the SFC. What we've done is that we've also issued guidelines to provide requirements to these virtual asset trading platforms. And based because so far we've been using the same business, same risk, same rules approach, which means that we identify the business activity and see whether it's similar to a regulated activity that we already currently regulate. And then we apply the same kind of rules to that similar activity. So what we've done in the guidelines is that the requirements that we've prescribed are really similar to requirements that you see for traditional securities brokers and automated trading venues. And exactly because we use an investor protection approach. So that's why we've designed the regime in this way. So there's requirements on safe custody, on conflicts of interest, on market manipulation, on anti-money laundering. So these are a lot of key requirements we placed in the guidelines. So what our vision is that we want to provide clear guidance to the industry, and such guidance is always consistent in order for the industry to know what they need to comply with, and then they could really safely within a compliant kind of a regulation, then they can actually develop and sustainably grow. So that's our main vision to really help the industry grow. And we also hope through providing more guidance, we actually also help the underlying technology to grow. So we see the potential in tokenization, and we think that it's very important to support the underlying technology as well. So that was also one key kind of factor in SFC stepping up and actually regulating this space.
Yeah, the technology is coming without or with regulation. Yeah, I bring now the word investor protection, I heard, guidelines. I want to switch to Ronald to explain us about the challenges in Switzerland. In 2018, I was not aware of that they already worked on that. So we thought that the Swiss regulation bodies are very, one of the first, Ronald. So We have a well-developed framework. We have a lot of companies working in that space. Could you explain us a little bit the status of today, and also maybe point out to what Elizabeth said, maybe differences already you see between our approach in Switzerland and the one to Hong Kong?
Yeah, sure. So I think Switzerland has chosen a similar path as explained. I mean, Switzerland had the ICO wave in 2017. And at that point in time, a lot of ICOs happened in Switzerland, but the regulatory regime was not very clear in the public. But luckily, the regulator FINMA in Switzerland then already issued guidelines in 2018, where they try to create a token categorization and also made their practice public on how they will treat different type of tokens. So that was already the point in time where Switzerland introduced the utility, payment, and asset/security tokens. In parallel, the Federal Council on the legal and regulatory level started to review the current laws to verify whether the laws need to be adjusted on the one side for the investor protection, but on the other side also to create a fruitful environment for this new technology. So Switzerland is a country which is supporting new technology, which wants to enable new technology, but also on the other hand, find a good balance to protect the reputation of the Swiss financial market. So they did that, and they came to the conclusion that in general, current laws already work very well because most of the Swiss laws are written in a technology neutral way, but it makes sense to create legal certainty to do certain adjustments. And the main adjustments that have been made are, for example, introduce ledger-based securities, which means that you can tokenize financial instruments and other goods in tokens instead of physical paper or centralized securities. Another point was that if someone is holding custody of crypto-based assets, that these assets are severable in case of a bankruptcy, also there to create a clear situation and also a protection of the customers. Another one was basically the introduction of a fintech license where you can offer kind of banking services without requiring a full banking license. And then, of course, the last point was the introduction of a new type of infrastructure license, which is the DLT trading system that allows, compared to a traditional license, that you can not only do the trading, but also clearing, settlement, and custody all together. Plus, you can offer the services directly to retail clients. And by this, basically, the intention of Switzerland was to create a full ecosystem. So on the regulator side, on the tax administration side, but also on the legal side, that the laws and everything comes together so that you have one ecosystem that plays in the same direction. So that's in summary how Switzerland did it so far.
That sounds very similar to the Hong Kong approach, but always using different words. Very important. That's always important. Find new words for the same things to make us a little bit worry or learn a little bit more. Now, I want to choose Rocky. You have now that regulation here. Elizabeth is forcing it. Does this give now more work for you? Do you see that you have more investors and companies flowing into Hong Kong because they have now a regulated framework or a framework of regulation?
Yeah, it's a very good point because, to be honest, it's a very busy time for all lawyers, actually. So we do have a lot of activities, a lot of plannings, applications, and also actual implementation on actual services and products as well. So it's different to kind of 2017, even up to a year or two ago. There are a lot of planning, in particular in the financial institutional space, all the global banks, asset managers. They are all on the topic. They all have focus groups. They all have plans, but we don't see the products out yet. It's not actually in the implementation stage. It's all planning. But for the past 12 to 18 months, it's about building the products, implementing it, going through the regulatory process, going through the infrastructure, and getting that product and service out to the market. We've seen actual the government's doing a very good job leading it with the tokenized green bonds that came out earlier this year. So it's actual real products that we see in the market. So that's definitely what we're seeing recently in Hong Kong.
Back to Ronald, maybe just asking you, how do you see, when we were a little bit earlier, I think 21 was this DLT bill online or active? Did you see, or did you still see a lot of flow because of that regulation?
Yes, I mean, I think the flow to Switzerland is not only coming because of this regulation, but more because of the legal certainty. And the main point of this is, of course, the guidelines from the Swiss financial market regulator. I think what was interesting in Switzerland with this new bill, where they adjusted the laws, that it takes much longer until everything builds up. So, for example, as you mentioned, the law has been introduced in January 2021, but we still don't have a DLT trading system here. And I think that the tokenization of financial instruments really kicks off. You need the full system, the full ecosystem with all the different parts. And as long as you don't have a trading system, you also do not go and tokenize all financial instruments. But I'm pretty sure 2023, beginning 2024 will be a game changer, because the first license have been filed now. And it's just a matter of time until Switzerland has a first fully regulated security token exchange. And this will be very exciting.
And despite of the fact that we have really two crypto banks and with Bitcoin Swiss, a very old player in that market, it's surprising that we don't have an exchange. Now, there is one world called MiCA in this space when we talk about regulation. So when always the US or European Union is doing something, and now in this case, the European Union, I would give Katharina a little bit of chance why MiCA can influence or will be maybe also a front runner for the future regulation. Could you give us or enlighten us here a little bit?
Certainly. So maybe before I will go to the point of whether MiCA will or might not influence other regulators, just to give you a few words what MiCA is. MiCA or MiCAR, it's an abbreviation for Market in Crypto Asset Regulation. It's European instrument law which applies directly in all member states. The difference is to directive which must be implemented. And this is what was happening in European Union. Every member state, some of them actually almost prohibited any business related to crypto assets. Some of them started regulating it on its own, like Estonia. And then at some point, Brussels decided, okay, in order to prevent the fragmented regulations in all of the member states, we are going to issue a regulation. And MiCA actually the first work started in 2020, now finally in 2023, MiCA has been published and will start to apply in its whole entirety by the end of 2024. It's exactly 30th of December, so we can say it actually will start to apply in whole as a whole legal act by 2024. Now, what MiCA is doing, MiCA is basically setting a frame work for crypto assets and services related to crypto assets. Very shortly, crypto assets are divided in kind of three types. E-money assets, which will be really the payments instrument, so-called asset reference tokens, called the abbreviation will be ART, like art. You will see and definitely in different sources. And the tokens which are neither at the payments or nor the art. So it's any kind, other kinds of tokens will be put in the third category. Important thing to remember, MiCA does not apply or does not cover tokens which will be in fact actually financial instrument. So it will be still, although MiCA was going to bring a lot of clarity to the European Union. We will have certain difficulties to differentiate between arts and certain crypto assets which are not typical financial instrument like derivatives or shares or bonds. And another important thing, MiCA is not applicable to NFTs, to any kind of decentralized finance, and to staking. There are plans to issue a new approach, new proposals maybe, but discussions will start how to regulate staking, NFTs, and DeFi. Important point to notice that even if MiCA is not applying to something what is called decentralized finance, MiCA is also saying what is not decentralized finance, meaning if there is actually centralized governance over a platform or over a network, it will not be treated as a DeFi, and NFTs, if they fragmented a whole series of actually the same crypto asset, they also will not be treated as NFTs. And now MiCA is regulating few types of services. It is execution of orders on behalf of clients, crypto assets placement, transfer of crypto assets on behalf of clients, reception and transmission, orders related to crypto assets, providing advice on investing on crypto assets, and managing portfolio of crypto assets, also providing custody, administration, exchange crypto assets for funds, and exchange of crypto assets for another crypto assets, and operating a trading platform of crypto assets. You can find all of those services in the MiCA itself. You can also find it on our website. We have a short, good, I think, summary what the crypto assets are, what are the conditions in order to be able to provide the services. Now, for countries like third countries to European Union, like Switzerland, Hong Kong, UK, Singapore, important thing to know that in order to provide crypto services which are covered by MiCA, one needs an authorization. So there is no equivalence principle from other countries. If you, let's say in Switzerland, you may provide already crypto services. In order to provide them in European Union, you need to have an authorization, unless it's based on reverse solicitation only. And this MiCA includes very, very strict definition what this reverse solicitation might be. And in very general words, a company from Switzerland or Hong Kong or Singapore would be able to provide crypto assets related services if it happens on a client exclusive initiative. If a client is coming to us saying, listen, would you please trade some crypto assets for me? Or can I use your custody wallet to stake, or not stake, to keep my crypto assets in that. But in order for the clients come to a provider from a third country, he or she needs to know about it. And even advertising, posts on Facebook, Instagram, whatever, will be treated as not initiative which has been put exclusively by a client. Also, regardless of that clients will confirm that it was on its own initiative. So as we can see, it might be very kind of draconian way to force providers from third countries to enter European Union market, but this is how it will happen. This is intended. And we discussed with European Commission why they decided to do this like this, because it will be difficult for companies from third country really to enter the market. And the answer is, it's very similar approach to GDPR, very similar approach to proposal of artificial intelligence regulation, which is now being discussed. Simply, European Union would like to establish standards. There are 450 million people, residents in European Union, and they say that's enough. So how it will influence Switzerland or other jurisdictions? Difficult to say. I guess companies from that countries, if they want to enter European Union market, they will have to adjust their business model in similar way also in different jurisdictions. Otherwise, they will have to do the work twice. And it's probably a little bit too early to say, but based on experience related to GDPR, GDPR is the General Data Protection Regulation, we may expect that it actually will influence legislation in other countries as well.
Thank you very much. So that sounds frightening a little bit for providers here in this crypto space, digital asset space, or virtual asset space. Yeah, that leads me a little bit to the questions I actually have. We have now less than 5 minutes to the question, what kind of future you see from regulation point, Elizabeth, and for our Switzerland expert, Ronald, for the future? I mean, we heard now MiCA is really like, it sounds dangerous because whatever you do and you have a European layout, then you have to do MiCA too. So what are the plans or the near future? What are you working on?
Right. Currently, we are working on revising the joint circular that we previously issued with the HKMA, because we've enabled retail investors to access SFC licensed virtual asset trading platforms. So right now, under the joint circular, we require our brokers, if they want to provide virtual asset dealing services, they need to partner with our SFC licensed platform. So if the licensed platform can provide access to retail, we think it's a natural extension to allow our brokers to also provide access to retail investors. So we're going to update our joint circular on this, so that we would enable the industry to also provide further services to retail investors. But stepping back, our vision, as I previously mentioned, was that we wanted to support the underlying technology. So another key thing that we're looking at right now is tokenization. So we think that so far, the potential benefits of tokenization, if they really succeed, it will actually enhance better investor outcomes. It will enhance efficiency in both issuance and settlement of securities, traditional financial instruments. So we are working closely with the industry. We've been talking with a lot of different kind of service providers and also the industry to understand what exactly is the industry doing in relation to tokenization and how we can provide further guidance so that they will know that what they're doing is on the right path. And we do hope that through providing more guidance and clarity, then they continue with their tokenization experiments and journey.
That's nice. You may have to talk to Philippe Nagari from Gen2, who was in the former panel discussion, because he's really one of the first and most leading ones. Now, Ronald, where does Switzerland now is now relaxing because our DLTB bill looks like comprehensive and broad supported. Are there any plans? What you heard from FINMA coming out the next months?
No, so I mean, of course, Switzerland is always looking at where the laws can be improved, but I don't think so there will be any reaction to MiCA, because in my opinion, MiCA is a great opportunity for countries like Switzerland, but also places like Hong Kong, because at the end, as a startup company, you build up where you can start without having too much compliance. So, I mean, most of the startups want to comply with the laws, they want to do everything right. But if the compliance hurdle is already very high and you have a lot of compliance costs, you go to another jurisdiction. So in my opinion, MiCA is a fail because it compares the whole non-security token space a little bit like the security space. For example, you need to file a white paper, which will be seen a little bit like a prospectus, which in my opinion should not be the idea if it's a pure utility outside of regulation. So there are many elements, and it's typical for the European Union that they basically start regulating a space, and when the law enters into force, the space has already moved on and works differently. So the law is always behind. So that's why I think for Switzerland, MiCA can be also a benefit. I mean, in general, it provides more clarity on the space, but Switzerland is still separate from that. And in my opinion, a better jurisdiction to kick off, Because if you want to go into European Union, you can then establish a subsidiary in Liechtenstein, and then from there go into the European Union. And Liechtenstein is very close to Switzerland, so there you can still live in Switzerland, have the people in Switzerland, but establish in Liechtenstein, and then you have also access to the European Union. But at the beginning, just start in Switzerland to have a lower compliance level.
Okay, that sounds that the basis is good, and Mika looks like more opportunity to bring in. So we're at the end of the panel. I have my last question. I was not aware that regulation could be the tipping point for the whole industry. So just a short answer, yes or no, starting with Rocky. What do you think? That the tipping point?
I would say yes with the caveat, and it's in a way it's the regulators are very important, but we have to keep in mind it's a game for everybody. Everyone needs to have the right mindset and right effort. Is government, regulators, investors, issuers, service providers. So it's for everybody.
Katharina, what do you think about this tipping equal or the tipping point is regulation?
I have similar view like Rocky. That's always depends from which side we actually see the regulation. So I'm totally with the previous voice here.
Okay, Ronald?
So I think it's an important point, because at the end, legal clarity is important to establish something. But on the other hand, regulators should also watch, learn, and then carefully regulate, because over-regulation can also kill an industry. And I think finding that balance is very important.
Now, last but not least, Elizabeth, because you are the regulator, what do you think about that?
I, of course, think that regulation is very important. And I do note all the comments that you've just said. Actually, in our role, we do try hard to work with the industry. We really do want to understand where the pain points are. And that's why we maintain a continuous dialogue and hope to further refine our regulatory framework as the industry develops.
That means not really a yes, but you're hardworking to help to make a yes. Thank you very, very much to all attendees, and also for the attendance. And nobody has left the room, so I'm happy to see that. Thank you very much.
Thank you so much. Yes, I'm glad that so many of you are still here. I would like to invite King Leung to do the closing remarks. Sorry that we have to rush everyone a bit, because Invest Hong Kong is very supportive, but they really need to vacate the room for another event. So that's why we have to leave here at 6 o'clock sharp.
Okay. Thank you, Dr. Ao. Now, I guess I don't want to bore you with all these details that you already heard for the past couple of hours. I just want to highlight 3 things, just to give you a sense about where the Hong Kong is going. Now, first, again, regulation is very important. So that's why, for example, I'll be accompanying the Under Secretary, Mr. Joseph Chan, to visit Switzerland in Zurich in early October, to learn from the industry players in Switzerland about the FEMA approach, to see if there's anything we can learn in Hong Kong. So this is something that we continue to do. Now, at the same time, when we are going around to talk to different people, now, first of all, I actively talk to a lot of the VCs in the Web3 digital asset space. And so thanks to supportive, partners like Elizabeth, with the regulators who've been keeping us, informed about the latest thinking, so that we are able to sort of magnify the messages to the broader audience. So in a way, this is something that we continue to do. Hopefully people understand where we're coming from, and to basically keep the ball rolling. Now, so that's the regulatory side in terms of what Invest Hong Kong can contribute. Now, the second thing I want to highlight is about technology, because obviously regulation would set the framework, but at the same time, we also want to cater to the needs of another very important community. So that's the developers, because obviously we would love to attract the developers more to develop things in Hong Kong, the commercial use cases on the chains, the layer 2s, and all that. We'd like to keep that going. So as a result, we are working with, for example, the ETH Hong Kong campaign, so that we are able to appeal to more of the developers community, so that we can also get the technology side of the community thriving going forward. So the second. And third, we all often like to emphasize that DeFi and then the digital assets is not just about, investment. It's not just finance. It's about how we're going to use this new tool or new platform that we are able to do for example, fundraising. That we are able to, in a way, inject some new ways of fundraising to help the mainstream sectors, particularly the not so sexy sectors that cannot easily raise money via the VCs. But now that with the STOs that we can access, for example, institutional money or the family offices, that we're able to raise money so that the not so sexy projects can be funded. So therefore, if that's the objective, then we would love to find more use cases in non-financial sector so that we are able to sort of showcase them to let people see, oh, wow, that we can actually do things like that with the digital assets revolution. So with that, we're trying to get more viral, more creative in our communication. So that's why in the upcoming FinTech Week in early November, the first week of November, we are just so privileged that we're able to partner with Yuga Labs. So for those of you who have been following NFTs, the Yuga Labs, the monkey, right, the monkey face, right? So we're able to get them to bring the flagship events, the 8 Fests, to Hong Kong. So I think for those folks in the NFT world, it is a big deal. Okay, these are highly influential people in the Web3 space. Some of them are like Web3 entrepreneurs who make a fortune from technology. So now they're diehard the Web8 fans. So these people are the KOLs, the key opinion leaders in their own rights. So from our understanding, more than 3,000 of these KOLs were flying into Hong Kong to attend the FinTech Week from the US, Europe, the rest of the world, now during that week. So why is this important? It's because when these folks come to Hong Kong, then we have lots of parties, by the way. We have lots of parties across Hong Kong, some really cool stuff. I just got off this meeting with those folks just an hour ago. So we got some really interesting non-finance kind of parties so that we are able to get people excited, and then if they feel good about themselves, we hope that they would tweet about it, they would talk about it on the IGs and just go viral. So that's our hope. So we'll see. Again, so this is all the things that we are doing to sort of hopefully give you a sense about the sort of all front assaults to make sure that we can get the message out. So with that, I just want to thank Dr. Tao again and also the CG for putting this together so that we can get the broader audience understand about what the Hong Kong platform can do to help the community. So with that, I just want to thank you everyone for your attention. Thank you so much.